Hi, welcome to Grand Insights. I'm your host, John Feligno, founder of Grand Life Financial. Today we're going to cover some potential ways to save money by reducing your income taxes. Now to begin, tax write-offs, or more commonly described as tax deductions, are going to lower your taxable income. So by subtracting the deductible expenses, you decrease your taxable income, thus that reduces your tax liability. Generally, there's two ways to claim your tax deductions, and that's either standard deduction or itemized deduction, of which you can only choose one. So the standard deduction is essentially a flat dollar reduction to your adjusted gross income, or AGI. The Tax Cuts and Jobs Act of 2017 nearly doubled the standard deduction, but it also eliminated or restricted many itemized deductions through year 2025, which caused a lot of taxpayers to choose the standard deduction. However, for those that do have deductions that exceed the standard deduction, it may be beneficial to itemize so that you can save money. But keep in mind, this requires more forms as well as proof that you're entitled to those deductions. So, homeowners can deduct mortgage interest on their primary residence and a second home. However, the Tax Cuts and Jobs Act limited the deduction on the first $750,000 of mortgage debt. And there's no longer a deduction for interest paid on home equity loans unless that debt is used to buy, build, or substantially improve your home. For small business owners and independent contractors, there's several deductions available. Small businesses like, for example, sole proprietorships, LLCs, S corporations, partnerships, they can qualify for a 20% deduction of taxable business income, which depends upon your total taxable income. So if you have dedicated space in your home that you use exclusively and regularly for business, you can deduct a portion of your mortgage interest, insurance, utilities, repairs, depreciation, health and business insurance premiums, continuing education classes or seminars that add value to your business. Auto expenses can be deducted, and you can do that based on standard mileage rates or actual car-related expenses. Retirement savings, self-employment taxes, office supplies, phone and internet, business travel, and meals. Now keep in mind with meals, you can deduct 50%. However, you can no longer deduct entertainment expenses, advertising and marketing, and certain memberships like chambers of commerce, professional organizations like bar and medical associations are tax deductible. Qualified medical expenses are deductible if they exceed 7.5% of your adjusted gross income and they were not reimbursed by your employer or your insurance company. So with state and local taxes, there's a $10,000 deduction limit if you're married filing jointly and a combination of property taxes and either state and local income tax or sales tax. So with charitable contributions, cash or property can be deducted, generally up to 60% of your AGI. Now, if you're a high income earner, a donor advised fund could be a good option as it allows you to bunch charitable deductions that you typically take each year into 1 year. That gives you an opportunity to take advantage of a larger tax break in that 1 year. If you have a health savings account, contributions as well as withdrawals are tax-free, as long as they're used for qualified medical expenses. You may be able to deduct contributions to a traditional IRA, although that's going to be dependent upon whether you or your spouse is covered by an employer retirement plan as well as your total income. And if you have student loans, you can deduct up to $2,500 on interest paid. So besides tax deductions, there's many tax credits that may be available to you. And a tax credit's different than a tax deduction in that it's a dollar for dollar reduction to your actual tax bill, and a few of them are refundable. Here's some of the available tax credits, most of which are going to be based upon your income and number of dependents. If you have any questions, please email or call me, and feel free to send questions that we'll consider for future topics. Thanks very much for joining.